Imagine earning passive income from stable businesses while you sleep. Today, we're diving into two stocks that are screaming, "Buy me right now." These aren't risky startups, they're established powerhouses. First, a leader in real estate investment trusts known as the Monthly Dividend Company, owning essential properties leased to big names. Next, a giant in energy infrastructure, crucial to the American energy market, offering juicy dividend yields. Let's dive in. Let's kick things off with Realty Income, ticker symbol O. A true legend among income investors and a staple in many portfolios seeking reliable, consistent cash flow. If you're looking for a stock that pays you while you sleep, Realty Income is a name you simply can't afford to overlook. Nicknamed the Monthly Dividend Company, Realty Income owns a staggering portfolio of over 15,450 commercial properties, making it one of the largest and most diversified real estate investment trusts or REITs in the world. These properties are spread across the United States and increasingly internationally, providing a broad base of income streams. What sets Realty Income apart is its focus on single-tenant buildings leased to some of the most recession-resistant businesses out there. Think household names like Walgreens, FedEx, and 7-Eleven, companies that provide essential goods and services and are likely to keep their doors open no matter what the economy is doing. The secret sauce behind Realty Income's stability is its triple-net lease model. In this arrangement, tenants are responsible for paying property taxes, insurance, and maintenance costs, while Realty Income simply collects the rent. This structure shifts much of the risk and expense away from the landlord, making the company's cash flow more predictable and less vulnerable to unexpected costs. With this model, Realty Income acts almost like a toll booth operator. Money comes in month after month, regardless of market turbulence. This steady stream of rent payments is the backbone of their ability to pay out monthly dividends to shareholders. The average lease term for their properties is about 10 years, which means tenants are locked in for the long haul. This long-term commitment ensures that Realty Income can plan ahead and provide investors with consistent, reliable monthly dividends, a rarity in the stock market. To put their track record in perspective, Realty Income has paid 647 consecutive monthly dividends since its founding. Even more impressive, they've managed to increase those dividends for 107 straight quarters. That's over 26 years of growing income, through recessions, market crashes, and everything in between. No matter what's happening in the broader economy, be it inflation, rising interest rates, or geopolitical uncertainty, Realty Income's dividend checks keep arriving in shareholders' accounts. This resilience is a testament to the strength of their business model and the quality of their tenants. Right now, the stock is especially attractive because of recent market volatility and concerns about rising interest rates. As rates have climbed, Realty Income's share price has dipped, creating a rare opportunity for long-term investors to buy a high-quality asset at a discount. Higher interest rates do make borrowing more expensive for REITs like Realty Income, which can temporarily pressure their stock price. But it's important to remember that these are short-term headwinds, not long-term threats to the business. Despite these challenges, Realty Income's business remains rock solid. Their occupancy rate is an impressive 98.6%, meaning nearly all of their properties are generating rent. This high occupancy is a sign of strong demand for their real estate and the reliability of their tenants. Because the stock price has dropped, the dividend yield has climbed to around 5.7%. That's a compelling income stream, especially when you consider the safety and consistency of those payments. In essence, you're buying a portfolio of high-quality, income-producing real estate at a bargain price. It's like getting a luxury property on sale, with the added benefit of professional management and diversification. The market's short-term worries about interest rates and economic cycles often create opportunities for patient long-term investors. While others panic and sell, you can take advantage of lower prices and lock in higher yields. Realty Income isn't standing still either. They're actively expanding their footprint, recently acquiring Spirit Realty Capital and making strategic moves into the European market. This international growth opens up new revenue streams and further diversifies their portfolio. By owning shares of Realty Income, you're essentially buying a stake in a vast, professionally managed real estate empire, without any of the headaches of being a landlord. No late-night calls about broken pipes, no chasing down tenants for rent, just pure passive income. When evaluating REITs, one of the most important metrics is Adjusted Funds from Operations, or AFFO. This figure tells you how much cash the company actually has available to pay dividends after accounting for maintenance and other necessary expenses. For 2024, Realty Income projects AFFO per share between $4.13 and $4.21. This healthy level of cash flow supports their generous dividend and leaves room for future growth as they acquire more properties and expand their operations. With an annual dividend of $3.08 per share, Realty Income's payout ratio sits at about 74%. This is a sustainable level, meaning the company isn't overextending itself and can continue to grow the dividend over time. As Realty Income continues to acquire new properties and expand into new markets, both their cash flow and their dividend payments are poised to grow. This creates a powerful compounding effect for investors who reinvest their dividends over time. Think of Realty Income as a compounding machine for long-term investors. The combination of monthly income, regular dividend increases, and the potential for capital appreciation makes it a cornerstone holding for anyone focused on building wealth steadily and securely. Their fortress-like business model, built on triple net leases and a diversified tenant base, provides a level of safety and predictability that's hard to find elsewhere in the market. Over the past 50 years, Realty Income has not only paid monthly dividends, but has also grown those payments, rewarding shareholders through all kinds of economic environments. Their long history of performance is a testament to the strength and resilience of their business. With market fears about interest rates and economic uncertainty, now could be one of the best times in years to buy Realty Income at a discount. When others are fearful, disciplined investors can seize the opportunity. By investing today, you can lock in a 5.7% yield that's paid out every single month, providing a steady stream of income you can count on, whether you're reinvesting for growth or using it to cover living expenses. Realty Income offers a rare blend of income stability and growth potential. It's a one-stop shop for investors who want to balance risk and reward, and who value peace of mind as much as profit. In today's market, Realty Income stands out as a dirt-cheap stock that deserves a spot on your watch list, or even in your portfolio. The combination of a discounted price, high yield, and proven track record is hard to beat. For investors seeking true peace of mind, Realty Income is the definition of sleeping well at night. With its monthly dividends, fortress-like business model, and decades of proven performance, it's a company you simply can't ignore. Now, let's talk about Energy Transfer, ticker symbol ET, a cash flow giant that most investors overlook. While the headlines are often dominated by tech stocks or the latest renewable energy darlings, Energy Transfer quietly powers a massive portion of the U.S. economy. It's a company that doesn't make a lot of noise, but its impact is felt in nearly every home, business, and industry across the country. As a master limited partnership or MLP, Energy Transfer operates in the midstream energy sector. This means they're not in the business of drilling for oil or gas, nor are they refining it into gasoline or chemicals. Instead, they're the critical link in the energy supply chain, responsible for transporting, storing, and processing the fuels that keep America running. They own and operate an enormous network of infrastructure that moves oil, natural gas, and natural gas liquids from where they're produced to where they're needed. Think of them as the highways and railroads of the energy world, ensuring that energy flows smoothly and efficiently across the nation. With over 125,000 miles of pipelines crisscrossing the United States, Energy Transfer is responsible for transporting about 30% of the nation's crude oil and natural gas. That's a staggering amount. Imagine the logistical complexity and scale required to move that much energy every single day. What sets Energy Transfer apart is its fee-based business model. Instead of relying on the volatile prices of oil and gas, they charge fees for the use of their pipelines and storage facilities. This means their revenue is largely insulated from the wild swings in commodity prices that can wreak havoc on other energy companies. Energy Transfer is a true cash-generating machine. For 2024, they expect to deliver between $13.1 and $13.4 billion in adjusted EBITDA, a key measure of operating profitability. This level of cash flow puts them among the elite in the energy sector, and it's a testament to the strength and reliability of their business model. Out of this mountain of cash, Energy Transfer generates $7.7 to $7.9 billion in distributable cash flow. This is the money available to pay investors, fund growth projects, and strengthen the company's financial position. For income-focused investors, this is where the story gets really interesting. Despite its impressive profitability and scale, Energy Transfer's stock trades at less than 8 times cash flow. In other words, for every dollar of cash the company generates, investors are paying a steep discount compared to many other sectors. This low valuation is a rare find in today's market. The market's lack of enthusiasm means the company offers an eye-popping 8.1% distribution yield. That's more than 4 times the yield of the S&P 500, and it's paid out in cash, directly to investors' accounts. For those seeking income, it's hard to find a more attractive opportunity. Importantly, this yield isn't just high, it's also well covered. Energy Transfer's distribution coverage ratio is around 2.0 times, meaning the company generates twice as much cash as it needs to pay its distributions. This provides a significant margin of safety, even if business conditions become challenging. With so much excess cash, Energy Transfer has been able to pay down debt and invest in new growth projects. This disciplined approach not only strengthens the company's balance sheet, but also positions it for future expansion and resilience. Over the past several years, management has made it a priority to improve the company's financial health. They've reduced leverage, refinanced debt at attractive rates, and built a more robust balance sheet. This focus on financial strength is a key reason why the company can sustain and grow its distributions. Once Energy Transfer hits its leverage target, management has signaled that even more cash will be returned to shareholders. This could come in the form of higher distributions, special payouts, or even share buybacks, each of which would directly benefit investors. The management team is laser-focused on creating value for shareholders. They've consistently increased distributions, demonstrating their commitment to rewarding investors for their trust and patience. Looking ahead, investors can expect 3% to 5% annual growth in distributions. This means your income from Energy Transfer isn't just high today, it's likely to keep rising in the years to come, compounding your returns over time. An 8.1% yield that grows every year is a powerful recipe for wealth creation. Over time, the combination of high income and steady growth can lead to significant compounding, especially if you reinvest your distributions. So why is the stock so cheap? Part of the answer lies in the complexity of the MLP structure, which can be confusing for many investors. There's also a growing negative sentiment toward fossil fuels, as the world shifts its focus to renewable energy and decarbonization. But the reality is that the transition to renewables will take decades. Even as wind and solar power grow, oil and gas will remain essential to the global economy for the foreseeable future. Pipelines like those owned by Energy Transfer will continue to play a vital role. Energy Transfer's infrastructure is not just important, it's absolutely essential. Without it, the energy that powers our homes, businesses, and industries simply couldn't get where it needs to go. The company isn't standing still either. They're actively exploring opportunities in natural gas liquids, carbon capture, and even hydrogen, areas that could become increasingly important as the energy landscape evolves. By investing in new technologies and adapting to changing market demands, Energy Transfer is positioning itself to remain relevant and profitable, no matter how the energy transition unfolds. In short, Energy Transfer is a dominant midstream player with a vast, irreplaceable network of assets. Their scale, efficiency, and strategic positioning give them a durable competitive advantage. Their fee-based model generates massive, stable cash flows year after year, regardless of what's happening with oil and gas prices. Yet, the stock remains dirt cheap, trading at less than 8 times cash flow, a valuation that's hard to find in today's market, especially for a business of this quality. Investors get a well-covered 8.1% yield, with the strong likelihood of future growth as the company continues to execute its strategy. The market continues to overlook this company, offering savvy investors the chance to own a high-quality asset at a true bargain price. In the meantime, you get paid handsomely to wait, collecting generous, growing distributions while the rest of the market catches on to this energy giant hiding in plain sight. There you have it, 2 phenomenal stocks that can serve as the backbone of a powerful income portfolio. Whether you're a seasoned investor or just starting out, these picks offer a blend of stability, growth, and reliable income that's hard to beat in today's market. Building wealth isn't about chasing the latest trends or taking wild risks. It's about making smart, informed decisions and letting your money work for you over time. Realty Income, often called the monthly dividend company, stands out for its remarkable consistency. With a vast portfolio of high-quality commercial properties, it delivers steady monthly paychecks to shareholders, making it a favorite among income-focused investors. Its long track record of dividend growth and resilience through economic cycles means you can count on it for both stability and peace of mind. On the other hand, Energy Transfer is a powerhouse in the energy sector, providing a massive, growing yield thanks to its robust cash flows. Its extensive pipeline network is critical to the nation's energy infrastructure, and its ability to generate strong profits even in volatile markets makes it a compelling choice for those seeking high income and long-term growth. What's even more exciting is that both of these stocks currently trade at bargain prices. This means you're not just getting high yields, you're also buying into companies with solid fundamentals and significant upside potential. It's rare to find opportunities that offer this combination of safety, income, and growth, especially in a market where many stocks are trading at premium valuations. This is the kind of opportunity that can set you up for lasting wealth. By focusing on quality companies with proven business models and shareholder-friendly policies, you're laying the groundwork for financial security and future prosperity. Remember, the most successful investors are those who think long-term and stay disciplined, even when the market gets noisy. If you're ready to take your investing skills to the next level, I invite you to check out my Value Stocks Investing Master Course. This comprehensive program is designed to help you master the art of value investing, so you can confidently identify great opportunities and avoid common pitfalls. Inside the course, you'll learn how to spot undervalued companies before the crowd, build a high-quality portfolio tailored to your goals, and protect your investments from market downturns. I'll walk you through real-world examples, proven strategies, and practical tools you can use right away. Whether you're just starting out or looking to refine your existing strategy, this course is packed with actionable insights and resources to help you achieve long-term wealth. You'll also gain access to a supportive community of like-minded investors, so you never have to go it alone. Join today to unlock step-by-step lessons, hands-on exercises, and practical strategies that you can apply immediately. Investing doesn't have to be complicated. Sometimes all you need is the right guidance and a clear plan. And if you're looking for even more exclusive stock tips, in-depth analysis, and early access to my latest research, consider joining the Stocks Galore Patreon. It's the best way to stay ahead of the curve and connect with a community of passionate investors. Head over to patreon.com/stocksgalore and become part of our smart investor community. Share your ideas, ask questions, and get feedback from fellow members who are just as committed to building wealth as you are. I'd love to hear your thoughts. Between Realty Income and Energy Transfer, which stock do you think has more upside potential? Drop your answer in the comments below, and let's get the conversation started. If you found this video helpful, don't forget to like, share, and subscribe for more investing insights. Thanks for watching, and here's to your financial success.